Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I want to speak about gold. Now, why do I want to speak about gold? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower time frames. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by this complex correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just reached exactly the 0.618, which is the golden ratio of the Fibonacci taken on this monthly impulse, which is a quite strong level of support and demand that we did expect the market to test and reject to the upside. And in fact, we can see that that is exactly what the market is currently doing, with the last test being here and the market immediately rejecting that zone to the upside. Now, if we look even closer, by going down on a line chart, what we can see is that the previous resistance turn support is exactly at this angle here. And we can see how the market, in fact, is currently testing this previous resistance turn support, which we can see even more clearly by zooming in, and has already started rejecting it to the upside. Now, if we drop down on the weekly time frame, what do we see? Now, here in the weekly time frame, we can see how this zone is previous weekly demand and support, which now should be acting once again as demand and support. In fact, from here, the market started all this rejection to the upside. At the moment, we're testing the same area, and there is the possibility to see a nice rejection to the upside. Actually, it should be quite expected. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. Dropping down on the daily time frame, what do we see? Now, here in the daily time frame, we can see how in creating this move to the downside, the market has also printed this overextended M pattern. And in general, after the creation of an overextended M pattern, what you want to see is the market create a rejection to the upside to go and retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. So in general, what you would like to see is the market to correct at least to the 0.32 of the Fibonacci taken on this daily impulse, which at the moment is lining up around this area. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials, so in general, the biggest speculators in the market, and we check the data specifically for gold, what we can see is that currently net positions have just started getting increased once again. We went from having 194.2k net positions all the way up to having 220.1k net positions, with 22.8k long positions getting added with the last report and 3k shorts getting closed, reaching 313k long positions and only 93.2k shorts from an institutional perspective. So also by looking at the COT data, everything seems quite bullish, and there is definitely the possibility to see the market here provide a nice rejection to the upside to go and retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. So how we will be approaching this potential longing opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So 4 hour, and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to go and retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.